Well, let's take another look at our ag commodity trade. Now, keep in mind, we did have some overnight export sales business this morning. USDA reported a sale of corn and a sale of soybeans this morning. Corn, 150,000 tons to unknown destinations. Soybeans, we sold 132,000 tons exactly to China, specifically to them. And once again, as has been the case many times over the past year and a half, when you get an overnight sale announcement like that, you'd think that would be friendly to the market. And it tends to prove the point once again that that has already been built into the market. By the time you get to the announcement, they have already traded it. Case in point, let's take a look at what's going on here in the corn and soybean markets right now. Let's go to the corn board. Our quotes provided by bar chart show March down 3 1/4 at 6.13, and December new crop corn down 6 1/4 at 5.59 per bushel. Likewise, in the soybeans, you get an export sale announcement like that, and well, they don't do anything. You have the March down 19 cents at 13.95 1/4. Also, you take a look at the new crop November contract on the soybeans, and well, right now it's actually trading 13 3/4 lower at 13.02 1/2, and it's barely hanging on to that $13 benchmark there. Now, if you look at the wheat, it's a different story, and we'll talk about this in a second. In Chicago, March is trading 7 3/4 higher at 7.87 3/4. And in Kansas City, you have the March contract, the nearby, trading 10 higher at 8.03 1/4. And in the spring wheat market, well, you have the Minneapolis wheat showing March 2 1/4 higher at 9.38 1/4. By the way, in the cotton trade this morning, let's take a look at the March over there. Last check, it was down 22 points at 120.53 per pound. Well, I want to welcome aboard Chris Winward, and of course, he is with Swift Trading. He's based in Delray Beach, Florida, but always good to visit with you, Chris, about what's going on in the market. A lot of gyrations, to say the least, here today, and I want to focus on this wheat market here for a second. This seems to be consumed by all the news coming out of Europe surrounding Ukraine. Now, Ukraine and Russia are a couple of the biggest competitors when it comes to wheat exports. And if they would happen to tie each other up and throw a monkey wrench into wheat exports, maybe that would cause the U.S. to get some business. Is that what the trade is thinking here today?
I think that's exactly what this is. The geopolitical risk over the last couple sessions has been building, and everything we're seeing on this end is showing that escalating before it starts to slow down. So that's on everybody's mind. The Black Sea region produces a whole lot of the world's wheat, and that puts us as a competitive force in the world market.
Is it more so that, or is the trade even considering the fact that our wheat is in really bad shape right now?
It's a combination of the two, and that is certainly helping the wheat market stay at these levels.
So there used to be a connection between wheat and corn. Does that exist anymore?
I think the entire grain sector has outside buying interest, which is why corn now is 4 or 5 cents off the lows, and still holding above that $6 level. It is pointing to that theory that the grain sector is interesting to outside money.
So what do you think about the situation in South America? They did get some needed rainfall in key growing areas, but it could turn dry once again, according to some forecasts that I've been hearing. And they've got to put that safrinha corn crop in yet, and they're really not having that great of a growing season yet.
And that's been hanging in the. That's been another factor here that's been influencing this over the last really couple months here, and that is certainly adding to this.
Well, Chris, we're going to take a break right here, and we'll come back and talk more about the markets. We'll focus more on livestock when we come back in a minute. We've been watching with keen interest what's going on in the equity markets today. Let's take a look at the Dow Jones Industrial Average right now, and boy, on the big board, it's really struggling. A little bit ago, it was down over 800 points. Right now, we have March futures down 743 points at 33,414. Big time nosedive there in the equity trade today. Dollar value rebounded this morning, and right now, March futures on the dollar index are up 479 points. We're at 96.115. Also, on the crude oil trade, you have the West Texas crude on the March now $2.35 lower at 82.79. So big time drop there. Meanwhile, on the cattle trade, after the cattle on feed report Friday that was deemed bearish, we have February live cattle down $1.65. April down $2.45 now at $139.65. So all kinds of bearishness showing up here in many of these markets. On the feeders, March down $2.40 at $160.90 this morning. On the lean hog trade, we have the lean hogs on the February contract down 80 cents, April down 32, but the deferreds just a touch higher. Let's go back to Chris Winward. This livestock trade, how susceptible is that to the moves going on over in the equities, like over on the Dow this morning?
Well, beef is a luxury item, so it's definitely susceptible to inflationary pressure. So people's heating bills are estimated to be potentially 25-35% higher this winter, and that cuts into your spending power.
All right, so when you look at the output coming out of these processing plants here the last couple of weeks, it sounds like there's been a lot of absenteeism out there, and it's hard to get the total output from those plants that maybe the packers would really like to see, and it seems to be showing up at the store shelves. Do you think that that could be rectified here in the next 2 or 3 weeks as the workers come back on the line?
I think so, but I think what's weighing on this market more so today is, we hit this overhead resistance like in the August feeder contract about 182, and we've been trying to punch through that for the last really since the beginning of this month, and have had trouble there. So couple that with a higher placement number and a bearish on feed report, it is not surprising that we are pressured today.
Well, Chris, I appreciate the comments today. Thanks for joining us. Always a pleasure. Chris Winward of Swift Trading joining us from Delray Beach, Florida. Janet, with that, I'll turn it back to you.